Hi everyone, today let's talk about my options portfolio. This is my 150th video, so that's pretty cool. Who thought I'd be still doing this after 150 videos? Kind of a lot, but let's keep it going. So first for this video, I'm going to talk about my long-term outlook for the S&P 500 and some of the recent price action that we've been seeing here recently, as well as a new indicator that I developed to help me get an idea of where we are relative to my moving averages that I'm basing most of my decisions off here recently. Then I'll talk about the shorter term perspective on the S&Ps. Then we'll take a look at the Nasdaq 100 on the longer term scale. And then we'll take a look at the shorter term chart here for the QQQs. Then I want to introduce the idea of VIX, which is the volatility index for the S&P 500. And then we'll talk about VXX, which is the ETF that allows you to trade VIX, even on platforms like Robinhood. Then, of course, I'll go over my Robinhood portfolio and my Tastyworks portfolio. Then I will finish up this episode with my watch list. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this as well as my passive portfolio overview every single week and give my opinion on individual stocks throughout the week. So definitely hit the bell so you don't miss out on any of that content. Welcome to the Portfolio Bulletin. Let's get started. So starting off here with the S&P 500 and talking about this new indicator that I've put on. This is measuring the percent difference between the 30 WMA and the actual closing price of the index. And then the black line here is measuring the distance between the 9 EMA and the closing price. And the idea here is that this is giving me a measurement to where I can determine if we're starting to get overextended in the short term and where it might be smart to take some positions off the table and either start to look short or wait till this line converges back closer to zero, at least more in a reasonable range, and then moving back up in the right direction, which would signal the continuation of the move. Now, this is the monthly chart, so each of these candles is a month. But what I really want to talk about here is that this move here is actually accelerating. So we're starting to see this push up move a little bit faster. And I actually had to redraw this line here, which is now predicting a price target of around 5,700 by March of 2022. And it seems like this is actually starting to go a little bit parabolic to where we could see a blow off top, maybe even before the end of the year. For a little reference, this higher line here is a line between the dot-com bubble and the highs of 1929. And anytime we've been above this line right here, established between 1936, 1967, and then again here, 2008, anytime we've been above that line, it's been unsustainable, meaning that we're moving into bubble territory. But of course, that doesn't mean that we're not going to go higher, at least in the short term. But I probably wouldn't be buying stock for the long term, as you'll most likely get cheaper prices later. And at the very least, start buying stock a little bit slower. This is becoming a trader's market, which means you can still get long, but understand you should be taking some money off the table, especially as we get closer and closer to this line. Of course, this is a future prediction. It doesn't mean that we won't go through this line for the first time in history. But it certainly seems like we won't stop this trend before we touch it. If we get close to this line, I will be taking money off the table. As I've said before, we haven't been able to stay above this trend line for any length of time. Most recently, looking at the dot-com bubble, when we came into this area, we hung out there for a few months before we started a meteoric downturn, which represented around 46-47% in the short term. Then we got a small bear market rally, which then led to another drop here in the 2008 crisis of another 50%. Of course, this financial crisis seems unlikely to happen again, but in my opinion, this is what's going to happen again here. So right now we're somewhere around here, which means we still have a good amount of upside, somewhere around 60%. But even this was a little bit more of a gradual run all the way from 1995 up to the 2000s. And what we're seeing here is a much steeper run to this point of previous resistance, where I expect we may hang out for a month or two, but it's not going to be sustainable, and we'll see at least a rejection back down to this lower level of at least 4,700 and potentially closer to 3,500 at this lower point of support. If we see any kind of turmoil, potentially in inflation rates going much, much higher, it's not unlikely that we could see a tag of this lower level, which we have seen several times throughout history in 1942, from the mid-70s all the way to the mid-80s, and again here at the bottom of the financial crisis. And what that could potentially look like here is this projection, which could bring us back to the previous lows here in 2000. But what seems more likely to me is that we would hit this line down here at around 3600 or 3700. Moving in here to the 4-hour chart on SPY, you can see we've had this very solid bull trend, where we've generally stayed within this range over the long period of time. We've been up over this green line here in June of 2000 and again here in August and since then we've generally been channeling in between these green lines. But right now it does like we are a little bit overextended, potentially getting into bubble territory again, even here in the short term. We are not currently overextended on the 4-hour chart based on this indicator down here. But as I mentioned, this blue area has generally been unsustainable, and we may see a retrace back down to these lower levels around 410 or 405. Of course, it's not impossible that we could see an acceleration up just because we're seeing that move on the longer term charts that I mentioned previously. Moving over to the Nasdaq index, you can see we've been generally trending along this line, somewhat above, somewhat below, depending on what's happening. But anytime we get reasonable separation above or below this line, we've retraced back to the line, whether it was the .com bubble, representing a huge move up here of over 900%. We then saw a retrace all the way back down to that trend line, which was established previously. And what we're seeing here recently is another move up off of that trend line, indicating general bubble territory. It does look fairly similar to the beginning of the .com bubble. But even if that's true, the point that we're at now still would represent a 500% increase. Of course, that seems almost impossible, as that would bring us up to around 82,000 in the Nasdaq. This move did take a long time, several years in fact, of a huge run up. From where we are now, it would take around 1,500 days to get to the previous move of the Nasdaq, which if we got an identical replication of the .com bubble, that would put us at around a price of 82,000 in April of 2025. Moving in closer here to the QQQs, I have a lot going on here. I have this upper trend line, a shorter term midline, and what we are now establishing as kind of a point of support, which is kind of creating this wider upward channel here in the Qs, which to me is healthy price action. As long as we continue to chop between this channel, it does project more upside. And we are currently above the previous high here, which was around 337, 338, which is now acting as support. Zooming in, you can see we came in and retested that level and then rejected it out, creating new highs. On the 4-hour chart, we're not overextended the way that we were in April, where we saw a little bit of short-term price action. So it seems like this could continue up at this regular pace. Next up is the VIX. VIX is the volatility index for the S&P 500, and what this is trying to project is a numerical value of the expected move for the S&Ps. The higher the number, the more likely the S&Ps is going to move by a large percentage. You can see the index is moving lower and lower, almost back to pre-pandemic levels here in January and February of 2020. Currently, we're sitting at 16.25, meaning that people are generally getting more and more complacent. And as we get more and more complacent, it seems like that would be a catalyst for that bull run that I was talking about up to that higher point of resistance for the S&Ps. The reason that this is valuable to pay attention to is if we do get close to that upper level of resistance, there is an opportunity here to trade VXX, at least in the short term, to make some pretty large percentage profits. So this is VXX, which is the ETF that you would trade in order to profit off of the movement in the VIX. If you have a futures trading platform, you can definitely trade the VIX directly, which you can do on Tastyworks, but it's not available on Robinhood. If you want to trade VIX on Robinhood, you have to use the ticker VXX, which is this chart right here. Understand that VXX is going to trend towards zero over time, so this is not something you necessarily want to buy and hold because it will move down all the way to zero eventually. But really what we're trying to do here is capture some of these larger moves. You can see here, if you were buying VXX in February, projecting a huge move down in the S&Ps, there was over a 500% profit to be made. And this is the weekly chart. So this move took a couple of weeks to top out at almost 80, starting at a level of around 14. So the idea here is that eventually we're going to see a reversal, as we've seen several times in history. Now this chart goes all the way back to February of 2009, and we've seen small spikes throughout, whether it was May of 2011, representing a pretty large move of over 100%. Another one here in 2015, representing a 76% move. Here again in 2018, representing another 100% move. December of 2018, 70%. So we see these small spikes over time. But again, this is something you have to time. It's not something that you can just buy and hold because this will eventually go to zero. My point here is that if we see the S&Ps go up to that next higher point of resistance, especially if we see it happen quickly, the opportunity to buy VXX at a very cheap level and then see a pretty dramatic spike of most likely over 100% is definitely an opportunity that's worth paying attention to. So use the chart that I mentioned previously, the logarithmic chart for the S&P 500. When we see the S&Ps hitting that higher point of resistance, not only can you hedge your position buying VXX, but you can understand that you should probably take some money off the table out of the S&P 500 because it's most likely overvalued, at least in the short term. That was a ton of information. And if you haven't heard of the VIX or VXX before, definitely do some research on exactly what that is. They're a little bit complicated. It's not quite the same as buying stock, as you're trading the literal volatility of the markets. But if you understand those principles and what they are, there's definitely a lot of potential to make some pretty big profits. Moving on to my Robinhood portfolio here, I started trading AT&T in the short term. It seems pretty flat, and in terms of options trading, that is a decent way to make money. Understand there's not a lot of volatility in here, so you're not going to get a lot of protection, but if you trade these short-term options and you're correct, it might be a way to make some pretty quick profits, and it's something that I'm testing out with a very small position here, selling the 30.5 puts, only down to the 28.5 puts. And the stock is currently trading right around $30. And I did this for a credit of 89 cents, and it's in a small profit right now. Moving back to AMC, this is somewhere where I'm making money. In a small profit right here of $35, down from 46. I really should look to roll this out in time, but there wasn't a ton of credit to be had, and I'll look for, and it may be something that, and I should really look to roll this out in time. I'll just have to wait and see what the credits are like, and definitely something to roll out on a down day because AMC has been very volatile, up and down around 5% per day. Moving on to Ford, this is a stock that I'm very bullish on. It's getting down into that 2-week range where I should be rolling this out. Currently sitting in a $14 profit with a credit of 40 cents, and it's only on a $2 wide, so this is a great position if you only have a few $100s to start trading options, and you still want to make a decent amount of profit with that money. GE is another stock that I've been rolling for quite a while. This is a stock that's down just a little bit, sitting at $13.38. I'm in mostly profit here at $30 profit out of 45 cents, so I definitely should be looking to roll this out in time, and I will be doing that next week, as this currently expires at the end of April, as I can trade this out to the end of May already. NEO, this has been my largest losing position here, currently sitting at $38, well below my strike of $39. I'm still pretty bullish on NEO. I think they're going to move above this price, and I'm still holding this position. I've currently gotten a credit of $1.22, so my break even is at $37.80. So really my net loss right here is only $100, and I'll keep rolling this out in time as long as NEO stays on their current trajectory. Moving on to Chewy, in a decent profit already of $72. I got a $150 credit for this, only doing a $5 wide, so that's a nice big profit potentially on a pretty small amount of risk. And you can see here the stock is even down, but I'm still in a pretty decent profit. I definitely should have been getting out when this was around 70 cents. That would have been a 50% profit already, but I didn't. So I'll have to make an adjustment here at the end of the week, potentially rolling out to the beginning of June, but we'll see how that plays out. And then lastly here we have Palantir. Palantir has been trending down for quite a while, currently sitting at $22.45. My puts are down here at $21, so still doing fine. Very small profit right now. No adjustments to be made here. Still very bullish long-term on Palantir. And as long as it continues to sit around here, I'll continue to rake in profits, trading this stock right around this $20 to $21 level. You can see I only have a few dollars at risk here, and I got an 82-cent credit. So pretty good risk reward, and I have no issues rolling this out in time, and maybe even putting a little bit more money at risk if it comes down in price. Overall though, looking at my long-term chart, I'm back up to all-time highs. This is because I had 4,000 Dogecoins, which rallied up massively, and I took a $1,000 profit on that. You can see that whole huge run here, which took place in the last couple of days, putting me back to all-time highs. Still holding Litecoin, Bitcoin, which is actually right at break even right now, as well as Ethereum. We had a little bit of a downtick overall in all cryptocurrencies, but you can see this huge run here in Dogecoin. I bought it way back here at around 5 cents, and then it rallied up massively to over 42 cents. I sold out at around 32 cents, so somewhere in this initial run up. In terms of short-term price action, I think we're going to see some further downward action, potentially find some support around 17 or 18 cents. And if we do find some support in there, I wouldn't be opposed to re-entering Dogecoin. But right here at this high level, not that far down off of its highs, doesn't seem to me that the risk reward is there. Also, I made a video on Bitcoin, which has had a pretty large drop off of its highs of around 64,000 all the way back down to 50,000 very briefly before bouncing back up to 55,000, which was a bounce right off of the 9 EMA on the weekly chart. And as long as that continues to hold, I'm not concerned holding this Bitcoin at these prices. Moving on to my Tastyworks portfolio, you can see my Roth IRA is continuing to trend upwards. My individual account is actually down a little bit, only up $1,000 on the year. That's because I did some short-term trading on futures where I lost a few $100s, but mainly because I bought a lot of Bitcoin here recently. And as I just mentioned, it did go down quite a bit. Looking at my Bitcoin, you can see I bought 0.079 of a coin, which was just under $5,000 worth. And currently it's down around $600. Again, this is a long-term hold for me. And you should check out my previous video where I talked about some of the technical analysis around Bitcoin if you're curious about my long-term projections there. But you can see here briefly, we touched that 9 EMA on the weekly chart, and then we've since bounced up off of that. We've been trending off this 9 EMA for quite a while here, and I expect this to continue even if we flatten out here for a little bit. Moving over into my individual positions, you can see very solid profits here on DocuSign. Etsy, decent profits as well, right around those 50% marks. Probably should be doing something here with Docu. Might move those puts up a little bit. SPY, this is just a put spread right here, as it seems like that move is accelerating, as I mentioned previously, which means that I don't want to be selling any calls right now, potentially because if that move does speed up, I will be losing money on the call side. Moving over to Fiverr, small profits here, pretty comfortable holding this right now. 33 days to expiration, no adjustments needed. Peloton, doing fine there. Square, so this is actually a short position, currently at $265. In a small profit right here, definitely something I need to pay attention to, as I am long-term bullish on Square, but it does have some resistance levels right where it's at right now, and hopefully it hangs out below this 265 level for the next week. Moving on to the Russell 2000, this is an iron condor. The Russell has been stuck in a holding pattern moving sideways for quite a few weeks already, so this is a decent profit, you can see here. Moving on to Boeing, I'm actually short-term bearish on Boeing. It has been trending down for a couple of days, and hopefully we can make a little bit of profit here in the short term. Lulu, very bullish on Lulu. This is a video on short-term trading that I made for them. Definitely check that one out if you're curious about them. Gold, short-term bearish here on gold as it's sitting right at the top of its range. CrowdStrike, very bullish long-term on CrowdStrike, currently at the $200 level. Always bullish on Apple, no issues here. Very close to the price though at 128, but this is only a $5 wide and I got a 150 credit. Disney, bullish on Disney, small profits, no issues. Beyond Meat, I actually took a short-term bullish position that expired out of the money, so that was a full profit. And I'm still very long-term bullish on Beyond. I also made another short-term video about them, so definitely check that one out if you're curious on Beyond. Match Group, another one that's made me quite a bit of profits over time. Understand that if you trade Match, the options here are very wide. This says a small loss, even though it's still 10 points above my put price. And I only have 33 days to expiration. I don't see any issues here. I think this is just an issue with the wide spreads. Starbucks, bullish on Starbucks right now. Costco, currently bullish. I tried to short Costco a little bit this week, and that didn't work out. Been hanging out at this 370 level for a couple of days already. Nike, I have an iron condor on Nike. Small profit right now. They have some pretty long-term resistance around this 140 level, but still trending upwards slowly. Tesla, short-term bullish position on Tesla. Tesla trading has been a pretty recent thing for me, but it seems to follow the trend patterns pretty well. And I made some profits getting short on Tesla early in the week, and then getting long on Tesla later in the week, and then I'm bullish here throughout next week. Lemonade, small losing position. It's actually below my strike here at $90, and it's sitting at $87.85. So a small loser here. I actually rolled this out in time, so I did take in a pretty large credit, but I still project Lemonade growing over time. PayPal, I'm short-term bearish, but long-term bullish. And there is some resistance at this 270 level. And hopefully we see a small rejection over next week so I can take some profits on this call spread. And then a resumption of the trend so I can take profits on the put side. Moving over to Jumia, small losing position, $75. Got a $2 credit for this, so my break even's actually $33, but I have no issues rolling this out in time if I need to. XOP, just have an iron condor on here. Small profits, $29. This is actually the oil and gas ETF from Spider. And this is just another way to diversify my portfolio, getting away from just tech stocks and a couple of consumer goods and moving over to a little bit of energy. And then looking at Roku, again, short-term bearish. I think there's resistance here at 390 for them. And they also rallied pretty aggressively, getting a little bit overextended on the short-term charts, but very bullish long-term down at 335. No issues here. Just hopefully we'll see a little bit of maintaining or maybe even a little bit of downward pressure in the short term and a resumption of the trend long term on Roku. Stocks I'm paying attention to here are DraftKings. Definitely want to position on DraftKings, but it's been trending down here on the daily chart. You can see riding that 9 EMA downwards. Seems to have found a little bit of support here in the $55 level. So if you're trading options, you might want to sell some puts below this point, but understand that this daily trend is still downwards. And you can see an even more aggressive version of that on the 4-hour chart. Another stock on my list is Pinterest. It had a pretty huge move down here on the last day of the week, which was good for me because I was actually short Pinterest, fortunately. And it closed all the way down at $76 per share, touching that 30 EMA on the daily chart, potentially representing an area of support. If we look at the weekly chart here, you can see it's right at that 9 EMA. And it seems like it might find some support down here at around $73 per share using the 30 WMA on the weekly chart. Understand that there was a double top here from February until current prices, and then that pretty solid rejection, which could mean we could see a breakthrough of this WMA and potentially see some lower prices. So there is certainly some risk. This is a double topping formation, which is very bearish. But as I mentioned, there's still a chance for support here at the 30 WMA. Also, on the 4-hour chart, which is generally where I do my short-term trading, we did get the cross of the averages, meaning that this is officially a short-term bear trend, and it might be smart to wait until we get another crossover, potentially signaling a resumption of the bull trend. Another company that I definitely want to position on is Snow. Snow has been downtrending for quite a long time. Looking at the weekly chart here, you can see we've been trending down from the highs of over $400 per share. Currently sitting at $243. The lockup period is over for Snow, so it seems like people who plan to sell their shares have done so already. And then it seems like we found a little bit of support here at $220. And on the daily chart, we got a crossover, meaning that we could see a potential resumption here. I understand this is a little bit bigger stock, but if you want a position in Snow, we did get the daily chart crossover, meaning we could see some more upward price action from here. Another stock that I've been trading here is Snapchat. I don't currently have a position. Looking at the chart, you can see we're still sitting pretty solid on the weekly. Looking at the daily chart, you can see we have a little bit of downward price action, but the trend is still bullish. And we found some support here previously at around $50 per share, maybe 49. Moving over to the 4-hour chart, you can see we're getting a test of that 30 WMA, potentially representing a crossover. And understanding that on the hourly chart, we did get that crossover and then a retest of the 9 EMA, meaning we could see some downward price action. It might be smart to see if we find some support around that $49 level again and see a potential resumption of the 4-hour trend back in the bullish direction. Understand that there is some very solid resistance here at $72 per share, not representing a huge amount of upside, but in options trading, as long as we stay flat, we make money. Lastly, I want to talk about AMD here. We did get the crossover on the daily chart and a little bit of support here from the WMA, meaning we could see a resumption of this bull trend. Looking at the weekly chart, however, we still are in this bearish trend. So understand that if you're going to trade this daily chart, you are trading a little bit counter trend. But on the daily and the 4-hour, you can see we're starting to see some bullish momentum, and you're only risking off of the $79 level, because that's the previous level of support. As long as we continue to see higher lows and higher highs, this could be a decent way to make a little bit of money. Let me know down in the comments section what you think of my perspective on the long-term charts for the S&Ps as well as the Nasdaq. If you have any questions on the VIX, definitely throw those down in the comments section as well. Understand I didn't do a huge amount of explaining exactly what that is, but maybe do a little bit of research and look for the potential there for getting some pretty large profits in a short amount of time. Let me know what you think of my overall portfolio, as well as my potentials for the watch list in the upcoming week. If you got any value out of this video, definitely like and subscribe. I will be putting out some individual stock videos this upcoming week also, so definitely hit the bell so you don't miss out on that content. Of course, none of this is financial advice. This is all for entertainment purposes, and have a great day.